Alright, what is going on, everybody? Hope you guys are having the best of your entire life. Today I made about 60 200 bucks from my trading. Now at one stage I was up probably $7,500. Yeah, 7.4 something. But anyway, by the time I took profits, got out of my entire positions, which I will explain the strategies and what I traded, why I traded it, and everything. Like literally holding no sauce at all. Like I'm giving out everything. Right. So I was up 6,200 when I closed everything. So let's break down the trades that I took. Boom. Basically, I made this money on one trade, but I took two trades, but we took three trades. I'll explain what that means. I know, even I'm confused. All right. If you do not know me, my name is Samesh, and I'm a full-time day trader. I've been day trading from like 5 or 6 years now, and the reason why I make these videos is because I want you to go out there and make some money. And literally, why not? Because hey, you get to live the life that you want to live. You get to give the family the life that they deserve. Why not? All right, so the first things first, let's break down the trade that I took on buy. First, I would like to explain the strategy behind this trade, right? So let's go on this notability and let me break it down, the reasoning behind the trade. So first things first, so let's say this is where the market closed. This is Monday, right? Or Tuesday. This is yesterday, Tuesday. This is where the market closed. And then after hours, this is what we did, right? So after hours, market, closes whatever time after hours. And this is the separation. And then 4 a.m. New York time is when the market reopens, like the pre-market opens. And the pre-market started roughly here. So this gap that we have right here, you see this gap right here? This gap is what we want for this strategy. And this strategy is called suckers strategy, right? Sucker strategy, and I'll explain why. But this gap is what we want to see. When that would not be considered a gap if we open, like let's say the price is next day open here and then move down. That's not a gap. Why? Because there's no gap between this. There has to be a significant gap for this strategy to work. And this strategy is called sucker strategy. Sweet. So let's go over this and let me break this down. As you can see on SPY, we significantly gapped down. So the prices closed right here and opened. So this is a significant gap down. So what is this? This becomes a sucker strategy play. Okay? Why? Because we can catch the suckers. Now, what does this sucker strategy even mean though? So let me explain the psychology behind this. So basically what happens is when we gap down significantly in the pre-market, you know what all these suckers want to do? These suckers are like, oh my God, this is the pre-market low. The moment pre-market low fails, this stock or SPY or whatever stock is going to keep on going low. Like so many people do this. This is one of the most craziest and dumbest mistake you will make as a trader. If you buy break of pre-market low or high right at the market open, like first 5 minutes of the market open, this is when this strategy works. Okay, so what people do is as soon as after such a big gap down, now everybody's like super tricked into this going to be a bearish day. The moment pre-market low fail, like literally breaks, they buy or they short, buy puts or they short the stock here, right? And now in order to short the stock, you have to sell first, right? Because you're going against it. That means you're trying to make the money when the stock goes down. You have to sell first. Now to close this this position, you have to buy back the shares, right? So normally what you do is you buy and then you sell, but you do another way around. So you got to sell first and then you buy back. Yes, if you do not do it, that doesn't mean other people don't. So other people are doing this, right? So they're shorting here, they're selling the stock here, but their stop loss is just above this pre-market low. They're like, oh, just in case if it reclaims. But that order is coming into the market as a buy order now. So this order is coming into the market as a buy order. Now this is called synthetic because this is not actually a buy order. Synthetic buying, right? This is not actually a buying order, but this is the buying order of this particular guy who shorted this. He's not actually buying the shares. He's just closing his position. That's why he's buying the shares. So that becomes synthetic buying and the stock prices can go up. Why? There's not just one dude who's doing it. There's thousands of people like this and they all start buying, which is not actually buying. They're just closing their position. So that's when the stop losses get triggered, right? Where do they put the stop loss? Just above the pre-market low, right? That's a strategy. break of a pre-market low after a huge gap down, break of the pre-market low, and then if it reclaims, put your stop loss literally at the lows and you can go long. That's what the strategy says. All right. But there has to be a significant gap. It can't be just 20 cents gap. There has to be a significant gap in the pre-market for all those suckers to kind of think this is super bearish. Let's just short this. Right. There has to be a significant gap. And that's what happened on SPY. There was a significant gap. Right. All these suckers are like, oh my God, this looks insane. You're going to keep on going lower. Now in the pre-market, market even moved down even further. Now, all these people are like, oh my God, this is going to keep on going lower. But I want to take their money. Literally. Like, this is what happens. Somebody, like, this is one dude sitting here. This is another dude sitting here. The same amount of money on the table. Somebody got to lose. Somebody got to take. That's it. So I want to take all these suckers' money, which is why I call this sucker strategy. These suckers have no idea how to trade. Not my problem. I know how to trade. I'm going to take their money. That's what I do. Whole day, every day. You're a sucker and you do not have any idea how to trade. I'm going to take your money. And I'm not feeling bad about it. Hey, go learn how to trade. You see what I'm saying? And that makes me the smart money concept. So I'm like trying to play the smart money. And that's what smart money does. They take suckers' money. Right? So now what am I doing here? The moment the market opens, I'm going to wait for the pre-market low to break below. Like I want the stock to break below the pre-market low. And then if it reclaims, I'm going to go long. As simple. Market opens the next minute. All right. We haven't broken the lows yet. So I'm still chilling. And this is where I started looking. So as I said, this has to work within first 5 minutes. Right? Remember I mentioned it. It has to work within first 5 minutes somewhere here. Yeah. Anyway, I'm telling you now. This has to work within first 5 minutes. Otherwise this strategy doesn't work. All right. So now this candle is 9:30. This candle is 9:32. And also, I trade. I'm sorry, I'm confusing you probably too much. For first, this probably is important for you. That's why I'll write it down. From 9:30 New York time to 10 o'clock, 10 a.m. New York time, I'm trading on a 2-minute chart. So this is my system, right? 10 a.m. to 11 a.m. New York time, I'm trading 5-minute chart. Right? Then 11 a.m. to 3 p.m. I'm trading 10-minute chart, right? And then 3 p.m. to 4 p.m. I don't trade, no trade. Why? I mean, I want to make money by 3 p.m. This, for me, I have figured out my strategies do not work in this. I don't try to make strategies work. If I'm trading for a whole day, 3 p.m. is my cutoff point. I walk away. My strategies work here. I want to trade when my strategies are working. All right. So write this down. This is a system that you need for every single thing. This is my system, and I'm just giving it out to you for free, pretty much. Right. All right. So pre-market low failed. I wanted to reclaim. Now the time is 9:34 already by the time this candle closed. If it doesn't go within next a minute, this is it. But then the moment the next minute the candle opened, it went down a little bit, then it reclaimed. And I'm like, sweet. Now my stop loss is roughly around this area. Like roughly around, I'd never put a stop loss. Just remember this. Never ever put a stop loss right at that dot. Always give itself a little bit of a room, right? For me, let's say if my stop loss would be a little bit lower, right? Never actually sitting on the spot. Never. Don't do this. So my stop loss like a little bit further away. Now this is like my stop loss. 10 cents away, 5 cents away, like this is 10 cents away stop loss, right? And this is important, all right? Otherwise, what will happen is you will get stopped out and the price will push. Sweet. Now reclaimed, I'm going long. I'm buying calls. And this was a 70% trade, right? So, and I'm long. The price went down a little bit. It's trying to scare everybody before the price moves up. That's what they're doing. Market makers want you to sell your long calls. They want everybody to jump out. So what they do a little bit of chop right at the market open. A little bit of chop, hoping everybody sells their shares to these people so the prices can push. Right? I'm like, bro, my stop loss is right here. I'm not giving you my share. I'm not giving you my calls, right? And I'm sitting in. And this is what they're doing. They're trying to shake the rug. Not me. My stop loss, up until it hits my stop loss, I'm going to stay in, right? I'm still in, no stress, no problem. And I'm in 526 calls. I'm like, no problem. I'm still in, no problem. Very close to my stop loss. I'm like, no problem. But this gave me enough time to keep adding to my position. I know where my stop loss is. I know this is the price, and I entered 30 contracts, then I added 20 contracts, then I added another 20. At one stage, I had like 120, 130 contracts. Now, you might be like, bro, that's a big position size. Yeah, that's $10,000 position size. You can do this, like, I'm talking about, you can make 70% returns. Like, I made 70% returns, right? So if you do that with a $1,000 account, that's $700. $1,000 position size, that's $700. If you do that with $500 position size, that's $350. You see what I'm saying? It's not about the money, it's about the percentage returns that I got for that particular capital invested, right? Anyway, and this is how the trade went, right? It kind of kept playing around for a little while, and then I'm like, okay, sweet, this is a VWAP, and now where to take profits on this trade? This is a stop loss, this is your entry, where to take profits? Profits goes at the VWAP. So my VWAP is sitting right here, 526-ish. So I'm like, okay, I'll take my first profit at 526. Sweet, no problem, right? Initially, here the VWAP was sitting at 526, here 525.9. I'm like, I'll take my first profit targets at 525.9. And I hit my profit target right here. I took a little bit off. I'm like, sweet. Now this is where I want you to pay attention. I call this concept negative risk management, right? It's called negative risk management. So basically what negative risk management is, it's a way how you can let your runners run, right? So basically what I did was, I'm holding 120, 130 contracts at this stage, whatever. I took 50 off. I was up like 20%, I think 20 or 30% I was up. Anyway, basically what I did here was if my entry was, let me check, my broker's open right here. My entry was about, my average right now is about 0.9. Okay, this is my average, 0.90. That means $90 a contract. 20% of this is, we're looking at like what, 1.08, right? This is where I exited a little bit. Sweet. Now that's where my stop loss now. My stop loss on the remainder of the contracts, which is 70 contracts, is this price where I entered, 0.90. Just in case the stock reverse, I'm not going to lose any more money. That's it. I already booked a little bit of gain. I took 50 contracts off, and all those 50 contracts I made $18 a contract. That means I'm up $900 right now. Sweet. That's all clear? Sweet. I'm up 900. Just in case if the stock reverses, I'll get out of the break even on the remainder of the contracts. I do not lose any money. I still walk away with 900. This is called negative risk management. It will help. Like, if you're somebody who you cannot hold your runners, and you're like, man, I sell every time early, negative risk management. Get out half your position size, get out, and for the remainder of the half, set your stop loss at the break even and let it run. I'm like, sweet, I'll set my stop loss at the break even. Let me just let it run. And it started pushing, right? Started pushing. Now 10 o'clock about to happen. Stock, it looking beautiful, right? Everything's looking beautiful. I'm still in this trade. And now 10 o'clock, what did I say? The moment 10 o'clock hits, I am jumping to the 5-minute chart. So I'm jumping to a 5-minute chart here, and everything's looking sweet. I'm like, okay, this is where I took my first profits. Next hourly level, this yellow line sitting at 527. I'll take a little bit off at 527 again. What happened? Yes, this kind of was scary. This was scary, but it wasn't that scary where I think I was up like 50% right here, 50, 60% right here. It was scary, but it was not that scary that it hit my break-even stop loss. It went really quick, boom, boom, right? So I was like, yeah, whatever. 527 is my target. 527 hit. I took a little bit more off. My stop loss is break-even. I'm just paying myself. Now, if 527.7 hits, what would happen? I will take a little bit more off. All these yellow lines that you see on my charts, this is my profit taking levels. As the price goes up, I'm going to keep taking profits around these levels. All right. So I took a little bit profits. Remainder of the contracts that I have, still break even. Sweet, no stress. And then what happened? It started reversing. My break even got hit because the theta is affecting my contracts as well. I'm doing 0 days to expiration. My break even got hit. I got out. Sweet. This one trade made me about $6,600 or something. Right? Insane trade. Wait, now, the second trade that I took, I hope this was helpful. I hope this was helpful. I'm trying to give you the full source. You might have to rewatch this section of the video. But yeah, all right. The second trade of the day. This is done. The second trade of the day was AMD. Okay, so let's go to AMD. And on AMD trade, yo, not gonna lie, this trade was looking insane. It was looking beautiful, and I lost money on this trade. I lost like $300, 300 something bucks. Anyway, let me break this trade down for you. Now, the big reason why I lost only such a little money on this trade was one very simple reason: I didn't jump in big position size. All right. The first reason I didn't jump in, like this trade was taken at 10 o'clock. And at 10 o'clock, you know the drill. I just explained to you before. At 10 o'clock is my 5-minute chart time. So 5-minute chart time. Based on a 5-minute chart, I was like looking at this. I'm like, okay, this looks sweet. It kind of looks like it's getting rejected off this level. There's also a confluence. So what's confluence? Confluence is a point when there's more than one reason for you to jump into a trade, right? There's more than one reason. There's VWAP here, there's TMA here, this green line is the 8 exponential moving average, white line is the VWAP, and this is an inverted hammer candle. Kind of looks, this is the most bearish candle out there, right? Or the second most bearish candle. It looks weak. Yes, it looks weak. But you know what doesn't look weak here? This green candle has so much volume. How do I know it has so much volume? Because the next red candle that we had less volume than the previous green one. If the sellers are strong, this seller volume should have been more than this buying volume. Does it make sense? Think about it. The buying volume was more than the seller volume that we just had. This is a super bearish candle. Why does it not have super bearish volume? And that was going on in my brain. I'm like, oh man, there's something fishy that's going on here. So because I had some doubts, I only did about 10 contracts. I still wanted to take the trade. I just didn't want to take the trade because of this reason. But I still wanted to take the trade just in case if it goes, I can add more. If, it keeps going, I'll add more. This is where I roughly entered. Now, where would be my stop loss? I wanted to enter the moment it breaks below this particular candle, right? Now, where would be my stop loss? My stop loss is like this 165 level. I'm like, if it breaks above 165, I'll get out. And this is what started happening. Started playing around a little bit. Clearly, the sellers are kind of, dying off. You can see. The sellers don't want to push the price down. The buyers are kind of taking over a little bit. This is where my stop loss got triggered. And I was out. I lost 30% on this trade, though. Understand this. I lost 30%. I'm just keeping it real. Even though I lost 300 something bucks. I lost 30% on this trade. I think 350 something about this. I lost 30% on this trade. Now that 30% is a lot, but because I knew that the stop loss is a little bit wide, I did small position size. I did only 10 contracts. So you can't win both ways. Just understand this. You cannot win both ways. You can't be like, oh, the stop loss is wide, but let me still do big position size. No, if the stop loss is too wide, more wider than you like, position size should go small. If the stop loss is too tight, your position size should go up. Does it make sense? Because if your stop loss is too tight, position size is up. If in case this worked, you're going to make a lot of money. If in this case this doesn't work, you're going to lose a little bit of money. Why stop loss is too tight anyway? Here, if this in case this trade worked, I would make all right money, not much, but the risk to reward's like 1-to-1. I'm not actually, the volume doesn't actually tell me that it's going to work. So this small size. Sweet. Now, these are the two trades that I took. There was one trade that everybody in my chat took, and other admins in my chat called it out, and they all traded their stock as well. So many people made boatloads of money on this. I'm not trying to flex or anything, yo. This is just me, showing off my students' results. Now, I trade at 11:30 p.m. So $2,000, one trade, 25%. This is SPY trade that I took. Netflix trade. This is a Netflix trade that we took. I didn't take this. Amber, thanks for SPY, 30-minute workday, $2,600, $340. Now I didn't. Yeah, this keeps on going, right? And of course you take some losses as well, like AMD trade that I explained. On AMD I lost a bunch of money. Anyway, now what happened here, right? Netflix, I didn't trade it. I know I didn't trade it because I was sitting at this stage. I was sitting in this trade, in this particular trade. I was not in this trade. I was in SPY trade, and there was a lot going on. But other admins in the chat, they were on voice as well. They were like, "Oh my god, this looks so good," and they all trade exactly like me. So I was watching what they are watching, but I just didn't. I'm not gonna lie, I just don't like trading Netflix. Even if I was not in any trade, I would have not traded this. I just trade these names, as you can see on my screen. I only trade these names. I don't trade anything outside this. Even Apple lately, Apple's not paying much. I'm not even trading Apple much. So I'm one of those traders who trade the same stocks over and over again. But I feel like there's something that you can learn from this trade, so I'll break it down. All right. Anyway, so this Netflix trade was called out at around this price point if 950 breaks, but 950 broke. Sweet. This is the 650 breaks. This is a 650 level. It's a simple concept. All right. The concept here is very, very simple. So if there's a big dynamite level, so dynamite levels are dynamite, spellings mistakes, but whatever. Dynamite levels are every $50 moves, every $50 marks. All right. Every $50 mark on any stock, be it Apple, SPY, QQQs, whatever. Right. So every $50 mark. Now 650 is a dynamite level. Dynamite just like super strong level. The price is trying to break, couldn't break. Price broke. Now there's couple ways how this can go. All right, I'll explain the couple ways. Actually, 3 ways. 3 ways how this can go. Number 1, it literally does this. It goes back down straight away. Next candle, if one candle is able to close above, next candle goes down straight away. All right, this is one way. That's why we like to wait for a little confirmation above this, right? Second way is it comes back, retests this critical level, and makes a kind of a wick here and there, plays around a little bit, and then it goes, right? These ones a little bit tough to trade, but you can kind of draw a flag or draw a little rectangle, see a break of rectangle, or take a break above this particular high. But the third one is we start making a little flag. What's a flag? Now this is a pole, this is a flag, this is a pole, this is a flag, and the flag is holding. The moment the flag breaks, you go long, right? This is called literally the dynamite trading levels. This is how you trade the dynamite trading levels. Once a big level breaks, let it form some sort of bullish pattern. So this is a bullish pattern and it breaks. All right, these are little loopholes, the glitches or strategies, the systems that we use, right? Anyway, this started happening and I was watching this. I'm like, oh my God, this looks really clean, but I don't want to take it because I don't like trading Netflix, right? I made a mistake, but anyway, maybe it's not a mistake. Maybe it's just a system that I use. So anyway, now it's not about retest of the critical level. This is not about retest. This is just a bullish play that you see above the critical level, right? So this Netflix, I'm like, oh my God, this looks super clean. And everybody in the chat's like, oh my God, this looks so good. It looks like a flag. Let's go long. And I think they entered 650 calls. And this is how it went, right? It broke this flag thing. Now, it never went back to retest. If you're somebody who's sitting there waiting for it to retest and you do not know this hack, if you're sitting there just, let it come down and retest, but you do not know this hack, you're not going to make money. Why never retest it? So you gotta, you can't be just sitting there waiting for a play to retest a critical level while there are other players like me or other players like me who are watching just a bullish flag and they'll take it. And you sitting there because you do not know what you do not know. So you're like, I never retested, I never entered. No, you just don't know what you don't know yet, right? So this is where everybody went long. And I'm like, this trade looks beautiful, right? Like Brent said, done for the day, all Netflix, 650, but that's 32% of the account. That's 20% of the account. See what I'm saying? Like right here, that's 16% of the account, 16% of the account. This is like, bro, these are small accounts and people printing money. You see what I'm saying? And these are all my students, by the way. Anyway, Netflix looks good. So what are the next levels? I was asking, what are the next levels? Yo, everybody, let me know what are the next levels. And because the price looks super bullish and it broke a big dynamite level, there are big chances that the stock might keep pushing, right? Because a big dynamite level breaks, stocks can keep pushing, right? And what happened? It pushed. And now, if you pay attention, 10 o'clock, we're going to go on a 5-minute chart, right? So they pushed. What happened here? Pay attention to this. This is something I want to break down. 10 o'clock about to hit. Let's go on a 5-minute chart, right? 10 o'clock hit. Go on a 5-minute chart. Let's go. You see this? The moment 10 o'clock, like this is where the 10 o'clock happened. What's happening? Now, a lot of people be like, oh, that's bearish candles. Yeah, bearish candles in the middle of nowhere does not mean shit. Literally. Bearish candles in the middle of nowhere does not mean crap. Put this in your head. Bearish candles, if there was a big critical level sitting here and bearish candles are happening on a critical level, then these bearish candles are holding some value to them. Otherwise, these bearish candles are not holding no value, nothing, zero, absolute zero. You know what I'm saying? And these are happening. This is just to scare the retail traders away. Like people like, I'm sorry, but people like you guys get scared when this stuff happens just because you do not know. Bearish candles have to happen at a critical level. Otherwise, it's full of shit. All right. And hey, we're like, okay, sweet. This still looks good. And I'm still walking, everybody walking in the chat. We are walking through the chat, the play in the chat. I'm sorry. Tongue twister. Anyway, we're still long. Sweet. Nothing looks bad. We're still long. What happened? It kind of broke the flag, retested the flag. Everything still looks good. And then it started making a move up again. Look at that. Right? Started making a move up again. And it kept pushing. It kept pushing. And I think this trade at one stage was like 180% trade. Because look at this, man. It went from 650 all the way to I think it went to 663, 664 where they started taking profits. Yeah. This is where they started taking profits. The reason why, super simple. The price made a new high, but like right here, the price made a new high. Volumes here high, but the volume here dropped, but the price went up. So there's a divergence between the volume and the price. So the price went up, the volume dropped. There's a divergence. That means the sellers are kind of taking over right now. And you do not exit straight away the entire position. You do negative risk management. You take half off and half you're still holding. I think it was like 170, 180% trade. That basically, you know what that means? 170, 180% trade. That means if you put $1,000 in a trade, you put $1,000, 100% will mean you make $1,000 back. So that's your return. This is still there, but you make $1,000 profit. And 180% would mean on a $1,000 position size, you're up $1,800. Insane. Options work insane, right? Even if you took 50% off, you booked 900 and the rest of it came as a break even, whatever, but you're still on a $1,000 position size, you still made 900, if that makes sense, right? And this is just a few trades that we took, 3 trades that we took in the chat, and everybody printed money, and the day is not even over yet. But do me a favor, everybody, do me a favor, because I'm using a whiteboard to kind of breaking down my strategies as well. If you like this, let me know in the chat. Let me know in the comments down below. Give me some feedback. Do you like these videos now? A little bit longer videos. I like making longer videos so I can just break down everything. So you have told me that you like longer videos. Let me know if you like these explanation on actual whiteboards. That's all I have for you guys. You guys have fun. Go print some money with this stuff. And if you print money, let me know in the comments down below if you do print money. All right. I'm out. Peace. Goodbye. Peace.